There is breaking news as we come on the air.
The Trump economy is sputtering. We learned this morning that job growth in the past 3 months has all but ended.
The bond market is supposed to reflect confidence in the economy and trust in the Federal Reserve. But right now, that trust is being shaken in a way that could have massive consequences. When the bond market moves against the Fed, it's not just numbers on a screen. It's a signal that the system is under stress. Rising yields, falling confidence, and unpredictable reactions mean that the Fed's power to guide the economy might not be working the way it used to. This isn't just about investors. It affects loans, mortgages, businesses, and even everyday people who have nothing to do with Wall Street. In this video, we're going to talk about why the bond market is moving like this, how it challenges the Fed, and what the hidden dangers could mean for the future. So stay with me till the end. And if you want more deep insights like this, don't forget to subscribe. The bond market has always been described as the heartbeat of the financial world. It reflects confidence, fear, trust, and doubt, all in one place. For decades, the Federal Reserve has used its tools, like setting interest rates and controlling liquidity, to guide the economy and keep things stable. But now, something different is happening. The bond market is no longer simply following the Fed's lead. Instead, it is moving in ways that suggest investors don't fully believe in the Fed's message anymore. And that is creating a storm that could affect everyone, not just those on Wall Street. To understand why this matters, we need to think about how bonds actually work. A bond is essentially a loan. Governments and companies issue them to borrow money, and investors buy them to earn interest. The yield on a bond, which is the return investors demand, tells us what people expect about the economy. Normally, when the Fed raises interest rates, bond yields rise in a controlled way, and when the Fed cuts rates, yields fall. But right now, the relationship is breaking. Yields are moving sharply, sometimes in the opposite direction of what the Fed is signaling. And that means investors are losing faith in the Fed's ability to control the future. The reasons for this are many. Inflation has stayed higher than the Fed predicted. Debt levels in the United States have grown to record highs, and the government keeps issuing more bonds to cover its spending. That huge supply of bonds pushes yields higher because investors demand more return to hold all that debt. At the same time, global buyers like China and Japan, who used to buy U.S. bonds in large amounts, are stepping back. With fewer reliable buyers and more bonds flooding the market, yields are spiking in ways the Fed can't fully manage. This is what people mean when they say the bond market is breaking the Fed. The consequences of this are serious. Rising bond yields make borrowing more expensive for everyone. Mortgage rates climb higher, making it harder for people to buy homes. Companies face higher costs to borrow money for expansion, which slows down business investment. Even the government itself ends up paying more interest on its massive debt, adding pressure to budgets. Some experts are already warning that this shift could mark the start of a larger financial crisis. If the Fed loses control of the bond market, then its ability to manage inflation, unemployment, and overall stability comes into question. That would be uncharted territory. Central banks are supposed to be the ultimate anchor, but without trust, even their tools may not work. This is why analysts say the bond market breaking the Fed is not just a financial issue, it's a potential systemic threat. The psychological effect is also huge. Investors who see unpredictable swings in bonds may pull back from risk altogether. That can drag stock markets lower, hurt retirement funds, and reduce the wealth effect that usually keeps consumer spending strong. Ordinary people may not follow bond yields on a daily basis, but they will feel the results in higher costs, fewer jobs, and a weaker economy. It is a reminder that what happens in the bond market does not stay in the bond market. It eventually finds its way into every corner of society. Governments and regulators are aware of this pressure, but there are no easy fixes. Cutting rates too fast could fuel inflation again. Keeping them high risks breaking the economy further. Reducing government debt issuance sounds simple, but in reality, the spending needs are too great, and cutting budgets sharply could cause political and social backlash. It leaves the Fed in a tight corner where every move is risky, and the bond market is the one holding the real power. So the big question is what comes next. Will the Fed find a way to restore trust and calm markets, or are we entering a new era where the bond market dictates terms to the central bank rather than the other way around? Either way, the stakes are enormous, and the outcome will shape the financial future not just of America, but of the entire world that relies on the dollar as its backbone. At the end of the day, this is more than a financial story. It is a story about power, trust, and the fragility of systems we thought were unshakable. The bond market has sent a message, and the Fed has no choice but to listen. The question is whether it can respond in time, or whether we are watching the start of a much bigger unraveling. What's happening right now shows us that the bond market is no longer just a mirror of the Fed's decisions. It's becoming a force of its own. That's dangerous, because when the market stops trusting the central bank, the entire financial system starts to shake. Ordinary people may not watch bond yields, but they will feel the pain through higher loans, tougher mortgages, and weaker growth. It makes me think that the balance of power has shifted, and the Fed is not as strong as it once seemed. The real challenge ahead is whether the Fed can rebuild trust before things spiral further out of control. If you want to keep following these kinds of discussions and understand how they connect to your everyday life, don't forget to subscribe.